want to go to Chicago and go right to the trading floor and visit with Scott Gecas. He's with Walsh Trading, and he joins us right now. Scott, when you talk to traders on the floor, a little bit of a rebound in some of these grain markets here today. How do they feel about that overall action?
Well, it's really unique because the overall action is going right through the headlines. So with the certain areas, so that's adding a little bit of upside momentum, but overall it's going to still be wait to see what happens with the Chinese trade war, with the talks next week, as well as the FOMC. So next week is going to be very important. We have a lot of things coming out that's going to dictate pretty much how we're going to go into that August report as far as the crop report goes. So we're going to have to wait and see. There's a lot of stuff coming out in the next few weeks. It's really important data, so we're going to see how that's going to work out. And the one thing I do want to make mention of is the skew in the bean market. So last week we had about a $5 skew to the upside calls. Monday it was still, even with the 2-day time decay, it was still a little bit of $5 over premium. Today that skew is absolutely flattened. So it's maybe about a 20 to 30 cent premium, the upside calls, but that's about it. So whatever was going on and whatever the market was trying to get in front of, it just didn't materialize. And that's why you've seen that skew come crashing down pretty much.
Interesting stuff. All right, now on the corn market right now, we've gone fairly flat there. Let's take a look at our futures, and on the corn market on September, absolutely unchanged at 425.5. December, the new crop month, is up a half a penny at 432. And then you look at the soybean market, and soybeans did firm up today. We have the September now 5 3/4 higher. We're at 897.25, and we have November 5 3/4 higher at 909.5. One of the biggest surprises of the day would be the Chicago wheat surging ahead here, along with the Kansas City market. December up 9 at 507.25 per bushel, and likewise Kansas City, solid strength here. That December contract is up 8 3/4, almost equaling the Chicago move. We're at 458 per bushel so far this morning. Scott, what do you hear about the wheat?
Yeah, the wheat market is very odd. So Chicago wheat, U.S. wheat is completely overpriced compared to the Black Sea. Egypt continues to buy from the Black Sea region. With those tenders that Egypt came in, that did add a little bit of support. So we're going to have to wait and see how that's really going to play out. Germany also lowered their production due to the heat. So maybe that, with everything that's going on with the world wheat prices, that maybe U.S. wheat is starting to look a little bit more attractive. So we have to wait and see how those numbers are really going to play out. But that might be one of the bullish catalysts moving forward right now.
Okay, we'll take a look at cattle and hogs in just a moment. We're talking with Scott Gecas, and we'll return right after these messages. It's hard to get a good read on a sense of direction here in the livestock market today. What do you think that's all about, Scott?
Yeah, well, we had new home sales came out. They were stronger than expected, so that encourages stronger beef prices just due to, a stronger economy. The cattle market tends to follow that stronger data points. So the cash trade was definitely supportive, 112 to 115. The drop in production from the first quarter is a little bit supportive. We're looking for a little bit of a ramp up in the February contract or so. That's pretty much normal. So we're going to see how that really plays out. Now, if you look at the lean hogs, that's a completely different story. So the August is trading a very heavy premium to the cash market. That's why you're seeing August being up a little bit more. But the reason could be just because of the trade war talks. So if they come back and they do anything with the tariffs as far as, pork tariffs, you're going to see a surge. So that's why there's a little bit of premium built into the August. But if, China still continues to buy U.S. pork, they're running at about 68% higher than versus last year, even with those high tariffs. So, the demand is definitely there. We just got to wait and see what's going to come out of this trade war talk next week, if anything, or if they're going to give any reprieve to the tariffs or whatnot. But if you look at the option flow, it's definitely skewed to the upside. There is a little bit more action on the downside when you're looking at the further out months. Mm-hmm. So if there is nothing done, we expect a little bit of a pullback. But it's very clear that traders are still buying dips.
Interesting stuff. All right, thank you, Scott. I appreciate that. Scott Gecas of Walsh Trading in Chicago.